You can see the sun popping up behind me. It's just reflecting the 5 o'clock hour here. We're getting up. Got a little shot of something in my coffee to get me going. Anybody ask one curious what that might be? Nope.
And Jodah's going all ASMR on us right now.
You can't hear me?
No, I can hear you. I can hear you slurping your coffee.
Oh yeah. Oh yeah.
Anyways, we have a guest here. Derek, do you want to introduce yourself to the audience?
Sure. Hi, everyone. My name is Derek Albanese. Quick TLDR, I guess. Originally from New York. Worked early on in my career in investment banking. Sort of before and after business school. After that, spent many years in the private equity business. And during those years, I often stepped into a lot of portfolio companies to help the businesses operate while we ran them and owned them. Got into tech, so I've sort of been CFO of a couple of different SaaS businesses. Been in crypto officially since 2016 when I bought my first Bitcoin. Spent a year frustrated with my gold and silver investments.
Are you a billionaire yet with your Bitcoin? Or how's that working for you?
Well, I spent 3 years in San Francisco trying to launch my own startup, and luckily crypto was booming, so it helped support me that whole time. But
did it really?
Yeah, it was amazing. Yeah. Part of me wishes I had just taken a job and sat on all that Bitcoin, but 2020.
And San Francisco will eat up some money. It'll eat up some fiat and Bitcoin money.
Oh, very much so.
And soul and spirit.
And all soul, spirit. They'll crush you.
Yeah, it was great though. It's such at the time it was such a beautiful city and really a great place to be as a founder. Just to be in that energy and just the kind of people you can meet socially was really great.
Well, Derek, I want to ask you a question on that because that was one of the notes I wrote down here because you mentioned it last time we spoke to you about that. And just to kind of softball this whole conversation, is Silicon Valley still a place that you would think as the, dare I use the word, mecca of innovation? Should we pray 4 directions in that daily to Silicon Valley to keep the investments flowing, or is it dispersed? And if so, what does that mean?
Oh, sure. Yeah, I mean, there's still quite a lot of money in Silicon Valley, and all the major VCs are still very much there. The city itself has sort of changed, maybe not for the best. So it hasn't created a nice environment for people to want to live there. You're not. I don't think because of, let's just say the crime or the changing environment, it's not an attractive environment for startup founders to go to. It really never was. Startup founders, you're on shoestring budgets and you need to save money, but at least you were in this environment where people were there to support you. But a lot of folks have just moved out. So no, I think there are other cities in the world competing for maybe the new Silicon Valley.
And that's funny. I can make a smaller analogy of that. When Dan and I moved there, San Francisco, there was already kind of an exodus going across the bay. Not from a technological perspective, from an artist perspective. San Francisco was an artist community up until Dan and I got there in the mid-90s.
We chased them all out.
We chased them out. And then at some point in time, they started moving over to Oakland because they were priced out. And it's interesting. And artists pushed the limits. They set the new standards for the new artists. And so innovation from an artist perspective was happening in Oakland, not in San Francisco. And then established artists would start to come back to San Francisco because that's where the money was. But the innovation was occurring in the cheaper places to live. And it sounds like that's probably a reality for just from technology perspective as well.
Yeah, no, I think that's right.
Well, and we're up in the Pacific Northwest now, and I'm in Seattle, and that's true in Seattle. So a lot of the tech sector has migrated up here, and we're seeing that too. Like the artists. When I first moved to Seattle, we had a thriving fringe theater community, as an example. Tons of theaters on Capitol Hill and around the city, and now they're all gone. They're basically all shut down.
And you moved there when, Dan? Just so people know the time frame we're talking about.
I'm talking about maybe 16 years ago.
So not really that long. Doesn't take long.
No. And so the art scene is, they're getting pushed out to Tacoma and Georgetown and other places. So I would warn people, don't necessarily welcome the tech sector into your neighborhood because it will Housing prices will skyrocket. The people will be forced out. It will create poverty. It will contribute to the homeless epidemic because it will create disparities in income that are pretty significant. And the artists will be driven out of your community.
And how much do you think remote work has sort of affected that? Both of you, Darren, Parker, and Derek.
I mean, remote work has definitely affected certain places in the world. I mean, right away I think of Bali, in Indonesia. This was a place, I think I went to Bali the first time in 2016. I loved it. It was this sort of retreat kind of refuge environment. But now remote work has allowed all kinds of folks, everyone's moving to Bali. You have all sorts of digital marketing, influencers, and they've all moved there. And it's exactly what, we talked about. The prices of homes have skyrocketed, which has really had a negative impact on, local people just trying to survive there. I mean, it's crazy to hear people say they're spending $2,000-$3,000 a month in rent in Bali. I mean,
wow. See, that's why you don't necessarily open the doors to the tech sector, right? I mean, it's not always like roses.
Yeah. Wow.
I'm sorry, we're supposed to be boosting the tech sector with this.
Yeah.
No, we also there's, as I mentioned in our conversation, there's pluses and minuses to everything, and let's have very clear and sober conversations about this stuff.
There's to acknowledge it. Yeah, I mean, for me, it's been very helpful. So I'm not tethered to an office, which is great, especially I think in Web3 in the blockchain world, where there are builders building great projects all over the world. It's helpful to be mobile. Because it's, you could do a lot remotely, but I think it's good to just be there on the ground and meeting with these teams. So it's great to be able to travel and not be required to come into an office.
What do you think about companies like Amazon that are forcing their employees to come back to the office?
Yeah, some folks, I think they believe that it's just, it's something that's critical for a more efficient workforce. Every company's different. Some of these larger firms and maybe even some larger financial institutions, they're still tethered to that belief that they need people there, in person. Yeah, maybe, it's different.
But Derek, are you asocial? So Dan and I have gone into conversations. We've had conversations on another show that we do at times about remote work and the need for people to work together. And really it boosts productivity. And we had one where we spoke to when Malcolm Gladwell made a comment, basically, get your asses back in the office. And he comes up with an argument of why it's important. A lot of it has to make sure that the group and the company and the team have a sense of direction. It really just kind of revolves around that, right?
And a sense of culture, too.
Culture. No, you're right. Culture actually, it starts with culture, which then will manifest a shared sense of direction. And can't get that, he states, through what we're doing right now. No, I feel like I know you very well, Derek. You and I could probably go and embrace each other, give each other a big hug now since we've been doing this for 5 minutes. But other than that, I'm quick to know people. I'm quick to feel for people, but not everybody does. Is that a reality? I mean, can we connect on the levels virtually, and can companies thrive in the same way? And can people feel that sense of culture and community through remote work, or does it require really to come together?
Yeah. Dan, do you want to take that?
Yeah, well, I mean, I don't know. I'm of two minds of it, right? So I really thrived during the pandemic after I got adapted to remote work. Initially, it was really hard. And then once I got in the groove and I got like blue blocking glasses, blue light blocking glasses, and stopped getting the headaches from looking at the screen all day, I started to thrive. But now I'm back at work. I'm on campus. I'm a college administrator, so I'm on campus pretty much 4 to 5 days a week. And it does feel good to be around people and seeing people interact. And I do think there is a different quality to the type of interactions you have in person versus online. Now, that said, I could probably do my entire job online. And it is funny because I do go to work and most of my meetings are still on Zoom, right? Because it's just...
That is funny, actually. Yeah.
But so...
That's ironic,
we got to find
actually.
a good balance. Yeah, it is ironic.
Here's an interesting perspective, maybe even just my most recent experience. So the last, like we discussed, the last year and a half I spent at Polygon. And so in the blockchain space, managing Polygon's $100 million venture fund. And, early on, I was hired remotely. It was the first time ever where I was actually hired not in person, through an in-person interview. And most of the workforce was very much in line with blockchain. It was a distributed workforce all over the world. And we were able to foster a great sense of community and culture. But then that said, on the flip side, we decided, that the management team there decided to set up an office in Dubai. And the Dubai office started with just like a few people stopping in. And then at any given moment, it's 20, 30, 40 people there all the time. Because some things it does help to be able to just get on a whiteboard, discuss things, pop back and forth, work, see, so maybe there is that balance, but companies can be very efficient remotely. It's probably just an inherent human desire to want to be social. And
Yeah.
Dan, I also want to say,
What
Dan,
about-
you've changed your tone too to some degree, which is, a testament to you. We all grow. Because I feel 6 months ago, 9 months ago, you were pretty adamant. I really like, or maybe a year, I like working from home. I mean, you were
I do
adamant.
like working from home.
No, to the point where, I think we had maybe we were opposing opinions, but I feel you have kind of come around, right? I mean, there is a point where you've kind of reframed your thinking based upon engaging with, I guess my point of actually inevitably engaging with your folks again. You're kind of like, I kind of like meeting with my people in person a little more than I remembered. Am I wrong, or?
Yeah, I mean the things, when you get people back together physically, there's always social interactions which can lead to conflict, and that's definitely come back, and that's not always fun to deal with. But
No.
for the most part, it hasn't been so bad on that spectrum. And yeah, I do. I don't think I ever was of the mindset like I don't want to see anybody.
No.
But because I do enjoy seeing the people I work with. But I also felt like I could, with my particular position, I could be very productive online. And I think I just want to make sure. What I fear is that we will go too far to one side or the other. When I think we need to figure out a good balance. When does it make sense for people to work at home? And when does it make sense for them to be remote? And also recognize it's not equitable always for everybody. A janitor or a groundskeeper can never work from home, right? Unless
Safeway employee, exactly.
Safeway employees.
Yeah.
I run one of the areas I run at my school is the library. They can't work from home for the most part. The circulation staff is people facing, so it makes it hard for a lot of different.
Unless
folks.
Amazon takes over the world, and then we just buy everything from Amazon and get our books from Amazon, then we can all stay from home. So
Yeah.
But even then, they have workers that have to distribute stuff. Derek, you made a comment about which was kind of close to home to me about taking your first job remotely. What was that feeling like? Because it happened to me, and I'll tell you, when you're done, it actually affected my decision.
Oh, interesting. Well, it was, I think at that point I had gotten so used to being remote. I don't know. Maybe I'm able to connect with people, over the phone or over video, and try, to get to know folks, whereas others are maybe not. It felt okay to me, for some reason. I guess I'm very adaptable. So I've sort of adapted to this new world where it's just like, I can meet someone easily and professionally through this video format, and actually develop a relationship with.
That's interesting. So my concern wasn't so much about the connection, because I did feel a connection, like I was making connections with the people I was talking with. I had a very good offer that I decided not to take, and this wasn't the reason why, but it was definitely something in the back of my mind, because I work in the security space. And so if you're familiar with the security space, it's sort of a paranoid space, right? Where they're constant. It's all about making sure you're not being taken advantage of one way or another. And so in my brain, I was like wondering to myself, once they asked for my social security number and stuff, like, I'm like, is this even a real company? Who are these people? How do I know they're real? What do I know? Where's their location? Because they didn't even really have a location, I think they kind of had one in Seattle, And again, like I said, that really wasn't my deciding factor of not taking the position, but it was definitely a factor that was kind of playing in the back of my head. So there's an interesting sort of disassociation, at least with people my age now. I imagine someone who's 20, 21, maybe that just doesn't matter anymore. But
They
for
throw
me,
their social security cards around all over the place.
right, maybe
Just take it.
just take it here. Just take it.
I have multiple identities anyhow. You can have one of them.
Boy, that's my fact. I only have one social security card. I'm screwing up. I'm failing.
The paranoia thing is, I think I'm going to flip that and say it's a good. Well, it's obviously it's a good thing. And even when if we're, let's say, evaluating an investment opportunity, it's always great to meet folks in person. But initially, maybe you're not distracted by just good salesmanship, and you're able to kind of look at the business more objectively in this type of a format. As opposed, so maybe there's a positive to it as far as an initial evaluation.
Interesting.
Fascinating.
Yeah.
So you're from finance, Derek. I don't want to lose that thread, right? So you started. You've been in traditional finance with a lot of companies. Morgan Chase, right? Or
JP Morgan, yep.
JP Morgan, that's right. So you were some of the big giants that were involved in the big crash that led to the recession, and then you moved to the Bitcoin realm to do finance. So let's talk about the traditional, your experience in the traditional realm, because I want to map that over to what the difference is in this new Bitcoin era. So what was your experience like in the traditional finance world, and how does it contrast to what you're doing now?
Oh, sure. Well, the investment banks are really there. They offer essentially three services, equity financing, debt financing, and M&A advisory work. So with those three different verticals, you're sort of helping companies do all kinds of things. And my experience personally, I mean, it's grueling, as an analyst or an associate, you're working 80, 100-hour weeks, but you're getting maybe some of the best training in evaluating and diligencing companies. So JP Morgan, I focused mostly on leverage buyouts, so executing acquisition finance. So it's basically structuring, originating high yield bonds, leverage loans for buyouts, all the big private equity funds buying companies. So you get really good in the deal space as well, and you're very well trained from a due diligence perspective.
And what are you looking for in that due diligence? I've heard that thrown around a lot, and I know what the term means. What are you looking for when you're doing your due diligence?
Oh, sure. Well, it depends on the stage of the company you're looking at. For a lot of these businesses, if we're doing this large, $10 billion buyout that KKR and Bain are leading, you're essentially leveraging the company up to buy those companies, looking at cash flow. So, part of your financial due diligence is putting models together to see what kind of free cash flow does this company have? How much debt could they possibly sustain? Are they going to meet all their interest payments and, any kind of amortization payments? So you're doing financial diligence. You're performing legal due diligence as well. All kinds of, risks associated with that particular business or industry. And then there's technical and engineering due diligence if you're actually the acquirer. Right. So you're digging into the company from all different angles, and you're essentially trying to just pick it apart. And you want to be able to assess risk. So every one of these public documents, whenever companies issue public debt, inside them there's a section called risk factors. And you're really trying to assess any possible risk that could affect your investment or could affect the company negatively. So that's
kind of like a larger scale investigation when you're trying to get a mortgage, right? Where the bank's just crawling up your ass.
It's very similar. Buying a house is very similar to a leverage buyout. You put equity in and you borrow the rest from a bank. Yeah.
And what's the outcome of that investment then? What are you guys trying to do? Because I know Bain was famous and this could be an ignorant statement, famous for buying companies, slicing them into pieces, and probably getting more for those individual pieces than they would about the one piece as a whole. I think they were famous for that.
Corporate raiders, right?
Yeah, back in the 80s, you had these kind of corporate raiders, although now they're called activist investors.
Okay.
That's a rebranding.
It's a total rebranding. But it was more common then to buy a company and say that the sum of its parts is greater than the whole. You don't see this as much because there are all kinds of protections that have been put in place to avoid these kind of hostile takeovers. But typically, the goal is you buy a company, you come in at a particular multiple. With their large established businesses, like in the private equity world, maybe you don't get a ton of multiple expansion. Maybe you get the same multiple on the way out that you did on the way in, but in the meantime, you're growing cash flow. So you're increasing your EBITDA or your earnings. And
well, real quick, I've heard that phrase. What is EBITDA? I'm sorry.
EBITDA is just it's a proxy for cash flow. It's earnings before interest, tax, depreciation, and amortization. So take your revenue minus all your expenses. So you've got some kind of a profit number, and then you add back these accounting non-cash numbers like depreciation and amortization. And then it's
kind of like determining your actual wealth, right?
Yeah, it's kind of like a good
what your debt to income ratio.
Yeah, exactly.
All right, I disrupted that thought though, so please continue if you remember.
No, that's okay. So the idea is, if you bought a company for $100 million, let's say 20 million is equity, 80 million is debt, and then over a period of time, when you own the company, you're paying down the debt, so your equity will naturally increase, and then the EBITDA will also grow as a result of growing the business. So that's on the private equity side. I was stepping into the businesses that we would acquire and then help the management teams just in any way I could. On the venture side, it's a little bit different. The venture side, you're not going to have cash flow, or earnings. It's much more early stage. And the multiple that you come in at, you're hoping to get a huge multiple expansion. If you come in and the company's, valued at, 10x, you want to or rather you come in, you want a 10x or a 20x return on your investment. So it's a little bit different. You're going to get huge growth depending on what stage on the venture side too.
I worked for a company named Tipco that was bought by Vista, which was, and they kind of, their whole, again, I don't know what their end goal. Oh, their end goal was to go public. So they took us off the market, if I remember correctly. And then they invested some money into the company to do whatever it was they wanted to do that made them feel to bring it back to market so that it would come out at a higher price point, I think, or something. I was never quite clear, but they were obviously wanting to improve something so they could make some money off of us. They spent a lot of money in management training, which was interesting, which was kind of always a neat thing, So, and that was my first sort of engagement with that kind of experience. And I argue it was kind of positive, at least for that particular experience, because they seemed to want to actually improve the system. Like they were investing in making the team better, which kind of surprised me for some reason. Again, coming from the notion of like a company like Bain, those stories you heard about corporate raiders, or what are they called now? Green Party raiders?
Corporate activists.
Activists,
Activist investors.
Well, look, when you acquire a company, the last thing you want to do is disrupt what made it great in the first place, the reason you bought the company. Now, depending on the stage of the business, maybe if it's a venture early stage company, maybe the management team could use a few upgrades. Maybe you want to bring in a new chief compliance officer or legal team, or maybe a great chief marketing officer. So there are definitely those sort of upgrades that are required if you're scaling up a business. But more established companies, you don't want to buy a company and have the team that you fell in love with all decide to leave after you bought them. You don't want to destroy value. You want to, add value.
Makes sense.
So then you decided to make this transition into the Web 3.0 space with blockchain and Bitcoin. What made you make that decision? How did you come to that point where you're like, okay, I want to leave the old system and go into the new?
I think it all sort of centered around, or the big pivot was around when I bought my first Bitcoin. It's sort of a funny story. I feel like I'm very early with the trends. Back in 2015, I was convinced the dollar was going to collapse. I was buying.
Do you still feel that way?
Absolutely. Yeah, I do. I think we're heading towards a currency reset, but that's a whole other conversation. But no, I bought lots of physical gold and silver. I had stacks of silver monster boxes in my closet. And I was taking.
Oh, you're one of those people.
And I do want to ask you about that too. When you're finished with this, I'm curious about that. I have a question about that. But go on, please.
Yeah.
Yes.
So, but after a year of holding those assets, it went nowhere, and I think I even ended up losing, $1,000 or something like that. Because you know what, this is not a good investment. And then I started to look at Bitcoin, and then it just made me think about money and try to understand and bring my focus back to what money is. And then I really, I read the Satoshi.
And what is it? What is money?
Well, money essentially it's a medium of exchange. It's a store of value. If you want to have a proper reserve currency, not a fiat currency in the way that we do in the U.S. and other parts of the world, you can't have the ability to print more of it. It has to be backed by something solid. And up until Nixon took us off the gold standard, the U.S. dollar was backed by gold. You could exchange your dollars, for gold. And so that's good, sound money. But now, once they remove that standard, the government can essentially just print endlessly, and that's what we've seen. We've seen the national debt double.
And why is it important to be backed by something, though? I mean, what's really the significance of that?
Sure.
Why can't I? I mean, if like I have bridges I need to be made, and there's not enough money in circulation, I'm going to make those bridges. I'm going to print another $2 billion to build some bridges. Here's $2 billion.
I got a printing press right over here in my basement.
Yeah, no. Dan and I are going to start printing
out money all the time.
Yeah, we're going to create our own non-fiat money.
Sure, others.
Jodah Dan coin.
Lots of folks have done it. I mean,
Yeah.
FTX printed FTT tokens.
That's right.
Oh yeah, we'll talk about him later.
Yeah.
So what is
for sound money? You need scarcity. Otherwise you're baking in inflation. Into the
So why do you need I'm going 5 whys on this one. Why do you need scarcity?
Well, because if essentially you can think of it this way: if there's no scarcity, there's endless printing. That money you're printing money, fiat dollars. Where is it going to go? Because everyone knows when you print more of something. If I'm on an island somewhere in the South Pacific and our currency is shells, right? And it's very rare for that island, but somebody comes from outside that environment and they're able to bring in a bunch of shells. Well, then essentially they're devaluing and debasing the existing currency because you're able to pump more into the system. And that currency can be used for purchasing items. So coming back to the dollar, more dollars pumped in the system, the dollar will go towards goods or real estate or stocks investments. And it will naturally, because people are buying, it will naturally inflate the prices of all of those assets. So there you're seeing in a real way inflation affecting prices as a result of printing money. So,
right.
In the last few administrations, we've seen money printing and very low interest rates. So the money didn't go to people to sort of stay in their bank accounts and help them pay their bills and buy food. It went to large financial institutions who borrowed at nearly 0% interest. And that money went towards stock speculation or real estate speculation.
Yeah,
and that's the inflation that we're living with.
I find myself thanks for that clarity. And it is that sort of designation that starts to make me think to myself, what's the point of money, in the sense, like, I do feel that we have a tendency to say humans are there to serve the currency, whereas as opposed to where I think currency is to serve the human. Because to your point, you still stuck in the shell game. I like the fact you use shells. You were still using a shell game, Derek. Because really the goal is to evaluate the value of human life, the value of human beings, right? So Jodah can talk, and people want to pay $1 million, pay money to see that. Or Jodah can dig holes. Jodah can dig holes really well, and Dan knows that I dig a lot of holes that I have to get myself out of. And so. And people, and we want to be able to evaluate that. Like, and if you have chickens and I want you, but you don't need holes, I'm screwed. Someone else might want my holes, but you don't need my holes. So we need a way to transfer that energy from point A to point B. But inevitably, that communication is about my value and your value. Then we throw this shell game into the factor, and now we're like having to service these shells. And to your point, it has to be something of finite value, because if we said, "Hey, Jodah's hole building capability is built into grains of sand," Yeah, it equals grains of sand. Well, there's so much grains of sand out there. How do you? Everybody can pick up some sand and try to get Jodah. Well, that doesn't work because I can't service all of you all. So obviously, we need a smaller set, something smaller that becomes finite, and then that comes. Then you can start playing and messing and effing with shit. And granted, I get it. You know, we're thinking obscurity is one of the great ways, but I don't even know if we make it transparent if it makes a difference. I don't know. I'm waxing and waning on something here, but I just want to know what your thoughts are on my little rant.
Yeah, no. I mean, it's we've seen there needs to be it's a store of value, right? So what does that mean? Because if I'm going to exchange, like I said, it's an energy exchange. We're trying to find a way of exchanging energy, whether through services or goods, and how do we do that? How do we transact, with that? What's the currency, and how can we hold? So there's a medium of exchange, but behind that is a store of value. And if there's just a lot of it, it's less valuable. And that's the problem. I mean, it seems like all great nations and great empires, throughout history have eventually gone down this path, and they've continued to debase their currency. In Rome, you went from gold coins to nickel to bronze to, wooden coins. And
they ended up doing wood?
Yeah, it's like a continued debasement of the currency. And then it's like, well, gold is more valuable than wood. And it's like, well, where's the money going? And they're just sort of printing to keep the economy going. And yeah, that's what we're seeing now. So that's why, when I discovered Bitcoin, maybe to kind of
I was going to help you get back on track.
Yeah. It was, I was amazed by it. I was amazed that someone had taken all of these different types of technology and put them together in this elegant way. And it just made total sense to me. And I had heard about it before, but I kind of thought, well, look, Bitcoin is purely speculative. It's only worth what somebody thinks it's worth. But I didn't really understand it until I dug in. And then that's what opened the door to all of the other, cryptocurrencies, but then blockchain technology overall. Yeah, kind of.
So
when
I hear you say that, right? Because you've just spent a lot of time talking about backed commodities, like that the dollar needs to be backed by gold, for instance, right? And when I think about Bitcoin, I think it's kind of a fictional value too, right? It's not really backed by anything other than math, maybe, right?
Well, there's a limited supply. So the way that that Satoshi structured it is that, essentially every time you validate transactions, people who are able to print the next block get a reward, and that reward is paid out in Bitcoin. So you're minting new Bitcoin, but there will only ever be 21 million Bitcoin in all of creation.
How much is out there right now? Do you know?
I think it's, oh my goodness, I think it's 19 or 20. I mean, it's very, we're getting close, but it's sort of exponential.
We're getting close to the end.
Yeah, it will go out for the next, I don't even know, 100 years or so. Because the reward itself gets halved every 4 years.
So that last coin is going to be like this mega value coin, and it's going to be like, and whoever gets that coin is going to be like rich.
Well,
straight up.
There's a lot of speculation on the price, and it's based on the supply, and obviously demand, right? So we're seeing more demand, institutional demand, through the different ETF applications, whether it's BlackRock or VanEck or ARK, or there's a whole host of them, and so we're starting to see potentially the next wave of adoption, which might be the institutional adoption.
So to kind of go back to Dan's question. It sounds to me your response is it's not so much the importance of having something solid to invest in, that to back it. You don't need to find something in the actual world of finite value. It's the act of of defining a finite system. However it's done, that system must be finite. And again, back to what Dan said, there's a math algorithm, and what is it called? Proof of work, right? It's proof of work for Bitcoin. Yeah. And the proof of work part, that gives us this limited amount of numbers of these things that you can put value into then. So that's the key point, is making sure you define something that's finite. And however you do that, it needs to be stable somehow, controlled. You can't have input from outside or inside to say, actually, we got a little more than that. You don't want that.
Right.
But it doesn't have to be a physical object like gold.
It doesn't have to. If you look at what money is, Bitcoin is a better form of it. Because and also it's all of the different characteristics. It's on a decentralized distributed ledger. So there are, and at first glance, it may look like a very inefficient database because you and I, like 10,000 different machines, are all updating the same ledger, but it allows a higher level of security and no one can go back. So the historical transactions are immutable. You can't go back and change them in the way that a centralized bank, could go back into their books and ledgers. A mistake, let's fix it. You can't do that with blockchain. So that's one of the amazing principles of Bitcoin. There's a limited supply. There's an immutable history. It's distributed. It's decentralized, completely permissionless. I don't need to know who you are. I have to verify that you have the Bitcoin that you're sending me. The code does it, and it uses cryptography in SHA-256. A hashing algorithm, so it's a sophisticated project, but it stands alone. And I think Michael Saylor talks about this all the time. Go to the airport with a gold bar. Try to travel with gold coins or gold bars. They won't let you. They'll most likely confiscate it from you. Or try to travel with the $100,000.
No, you can't. You can't. I don't think you can fly with more than $10,000.
10,000, yeah, exactly. But even then, it's like you're raising suspicion, and it's your money.
Well, then you're part of the mafia.
That's right. They make all kinds of assumptions. Yeah, but with Bitcoin, it's digital. I could put it in a flash drive, or it's somewhere in some sort of custodial wallet.
Okay, so I hear you, right? And this is often the stance people on the show take, right, around Bitcoin and the gospel of Bitcoin and the transparency aspect. But we have Sam Bankman-Fried, who just got prosecuted, found guilty of fraud yesterday, right?
Oh, it was yesterday. Okay.
Yeah, he's facing 110 years if when the sentencing comes down. So how do we explain him? If Bitcoin, the Bitcoin ecosystem and the blockchain ecosystem is so transparent, how was he able to get away with what he did?
Sure. I mean, this is just, I would call it classic organizational fraud. That's all it is. This was the fact that they ran an exchange for people to buy and sell cryptocurrencies is almost tangential. They did one of the things that you never do. Well, essentially, FTX was an exchange. And then they also ran a business called Alameda Research, which was a hedge fund. And They allowed Alameda to use customer funds from FTX to trade with. And you can't do that, And so they broke all kinds of laws doing this. So, it's gross financial mismanagement and just fraud. Now, part of me feels like, so that aside, if they didn't do that, part of me feels like they were growing so fast that they needed the right kind of management team upgrades. They didn't have a CFO. They didn't have basic financial and
Bankman-Fried is this young wonder kid from Stanford, where his parents are Stanford professors. He's this young genius, a wonderkind, donating all this money to the Democratic Party and doing activist investing himself to try and prevent Trump from running. I mean, this guy is like, he's a hero. Why shouldn't we put all of our faith in him?
Yeah, I mean,
he's like Jesus Christ resurrected.
Unfortunately, he violated securities laws, but the biggest thing is, using, if your customer.
Wait, Derek, you said he violated securities law. That's not, in my mind, the most important thing. Didn't people get hurt?
That's absolutely. People lost money. I mean, I know there are all kinds of stories about people holding their retirement funds at FTX, and it's, hopefully there's enough cash for people to get something, as the bankruptcy proceedings kind of continue. But no, there was.
Shouldn't the Democrats just pay back everybody?
I think they should, but they probably won't,
Well, I guess what I was trying to get at with my little monologue there, Derek, was trying to pivot off of what you had said about mature management, right? I have a theory, like, especially in Western culture, we have this kind of fixation on youth, and the new generation is going to be the savior of the world. And I think the Sam Bankman-Fried persona initially was part of that youth. I'm going to be able to save the world and do all this stuff, when we know that's kind of bullshit, right? And so I think that speaks to what you were saying about, yeah, they needed more mature managers. You just don't want to throw a kid into this playpen with other people's money, billions of dollars worth of other people's money, and expect them to have the ethical compass or ethical depth to make good decisions. Because we know there are 50 and 60-year-olds in the in the fiat financial world who can't make ethical decisions. Enron, right? So
yeah, fraud. It happens. It happens. I mean, I think so. I mean, even just to kind of speak to my own experience, I kind of grew up professionally in a very traditional environment, and places all like an investment bank. They've worked through these issues already over the last 100 years. So I was sort of I came up in an environment that we thought a lot about compliance and conflicts and sorts of just good governance policies. And when I was working on deals, so not to get off topic, but when private equity firms are trying to acquire a business, a lot of them compete. So a bank will run an auction process. So a lot of times there are similar teams within the same investment bank, but we don't even talk to each other. There are all of these firewalls that are set up from a compliance perspective. So, even in a situation like that, my colleague could be working on the same deal, but we wouldn't know it. And also, there's a legitimate fear of going to jail. I don't want to break the law, even by accident. And I think, a lot of the younger entrepreneurs...
Is there really a legitimate fear? I mean, maybe larger companies, but I mean, I've worked for a lot of startups, and that's not usually the number one concern.
It's not, but this was an exchange. To me, this is
but when you work with finance, I could see it being different than
okay,
with different levels of control and compliance, requirements.
So Dan, I want to stick with the one thing that we kind of skirted over. Dan made a point of. I'm curious of your thoughts on that. Youth in this world, youth is perceived as a disruptor, right? I think youth is like, get that young person in here because they're willing to disrupt. And what is the factor of youth versus wisdom and age or whatever when it comes to investment? Are investors looking for wisdom? Are they looking for disruption? Is it space contingent? What is the factor? Because I am old, and I'm going to go start a company. And how is that, the age being business old, going to get in the way of investors going, yeah, I want to give him money to make that happen?
Sure. I mean, well, on the investor side, experience helps to avoid certain situations because you probably lived through either failures or when things go wrong. So that's where experience really helps. On the founder side, youth is just youth and excitement and drive and grit. These are the things required to launch a business. So in a lot of ways, you need that youthful energy and that sort of optimism that you can do anything, and you'll need that, because starting a company, taking it from that 0 to 1 stage is very difficult. Finding the right partners, finding the right team, figuring out product market fit, raising money from investors, it's a grind. And you kind of need that youthful energy to drive forward. And you can have youthful energy at any age. But
I'm much more youthful than Jodah.
And Dan's 70 years old, so it's
I am
looking good.
Look good, don't I?
I think we're. Are we in the you look good for your
something.
age phase?
It's vampirism. Vampirism. I mean, I drink some blood every day.
Yeah, that's right. Dan sucks the blood of.
But no, I mean, and then at the same time, as a venture investor, what you don't want to do is stifle that type of energy and excitement from a founder and come in and say, oh, let me help you run your business, or let me help guide the vision. No, if there's a great founder with a great product, great team, you want to be able to foster that and not, kind of stifle it.
Yeah,
Interesting. And isn't it possible that really what you're looking for is somebody who's willing to go to jail for 20 years because when they get out they'll be 45 and they can still go do something?
I don't know about that.
Oh, okay. Am I wrong about that? Oh, okay.
I know we only got a few more minutes here with you, Derek. I want to talk about your venture capital work in this space, in the Bitcoin space. What are some businesses that you're working on funding right now? What are you looking for in businesses to invest in?
Sure. Yeah, I think it feels like the markets are changing, or at least the mood or sentiment. We've been in this crypto winter now for a couple of years.
Can you just describe that? What does that mean and why?
Winter is coming.
So the markets overall, this happens with blockchain and crypto. It comes in these different waves. We had this sort of 2020 DeFi summer where all these projects were launching, and it's kind of natural for a 2 to 3 year period where we had very aggressive investing, and then things tend to kind of slow down a bit, which is not a bad thing, because what we're seeing now, we're in this point where we're going to be able to see which of these companies will survive, which were able to figure out or get their product to a certain point and figure out market fit right away. So it's a very unique time right now. But no, where we're looking to invest, it depends. The last 2 to 3 years, you've seen huge investments in the blockchain gaming space. I think you're going to see continued activity there. But more so, I think dollars are probably shifting over to the DeFi space, and specifically tokenization of real world assets.
And what is DeFi space?
Decentralized finance, just broadly speaking.
Meaning?
It's basically taking any sort of financial product or service offering in the traditional world and using blockchain to, in a way you could say, automate or decentralize or make it more efficient, or a more visible, efficient ledger system. Tokenization of all kinds of assets has always sort of been the promise of blockchain. I think we're starting to see larger institutions, traditional institutions, wanting to come into the space.
And when you say tokenization of assets, are we literally going to the point of like, that tree has some tokens on it, that car has tokens on it, that rock has some tokens on it, like literally tokenizing
Bigfoot token.
The world. The Bigfoot has tokens on it. Is that what we're kind of talking about? Or?
we could token. Yeah, sure. Bigfoot NFTs. Those are tokens.
There we go. We should do that.
The next
Launch
one.
it here, folks. We launched it here.
I love it. Yeah. So, even like within the climate space, they are in fact tokenizing carbon credits. That's what a lot of those carbon credits are. You could take a large plot of land, and that land is projected to produce a certain amount of carbon over a certain period of time. You kind of take it almost like a fixed income product. You could securitize it and sell it in the form of a bond. But that bond can be tokenized, meaning essentially goes from the traditional financial world onto the blockchain. So you can sort of think of things on-chain, off-chain. And tokenizing means I can now go and purchase either a whole token or a fractional version of that token, and I can own it. So and along with that token, it's digital programmable security in the form of embedded in a smart contract. So
has Bitcoin? We ask this question kind of regularly. Has Bitcoin crossed the chasm? Does it need to cross the chasm? If it hasn't crossed the chasm, what gets it across the chasm?
And do you mean
Bitcoin? I'm blockchain technology.
It's interesting. I feel like a lot of the businesses that I've had a chance to look at are so far on the leading edge of development. It's very exciting, especially being at Polygon too, from a technology standpoint. Really on the leading and cutting edge of blockchain. But most people in the world have no idea what's going on. Most people, still don't even understand Bitcoin. So we're still very early. But I think with continued institutional adoption, people will become more familiar with it. And honestly, people don't need to know how blockchain technology works to be using it. Yeah, I think the adoption will continue, and then maybe there will be new catalysts that sort of skyrocketed. So I'll give you an example. Things like NFTs, right? So I have no idea what a collectible is worth. I really don't. But I believe in the technology and the application of the technology, and what it's going to do going forward. But that whole wave that occurred brought in a whole new set of users, and it brought a bunch of people in who now have wallets. So that's a big deal, So with like all of these enterprise adoptions, you're bringing people in little by little into the space. Even as example, Reddit. So Reddit, by allowing people to change their avatar with an NFT, they instantly created a wallet for every one of the users. So a non-crypto person is now a crypto person. They have a wallet. And it's kind of like, so little by little, we're introducing it and inching people essentially into the blockchain or into Web3.
Oh, that's fascinating. Yeah, I guess you have to get to that tipping point, as Malcolm Gladwell would say, right? Where is that point where you get where the trend moves to such a direction that it tips over and then it suddenly becomes popular and mass adopted?
Yeah, and it could be NFTs. NFTs, essentially, non-fungible tokens. I think there's, maybe over the next, who knows, 3, 5, 10 years, I think people will be interacting with all different types of digital environments. So metaverses. And to be able to access those environments, you're going to need your key card. And that
what you're going to need, honestly? I'm going to tell you. I'm going to give you the key right now. Sex.
NFT sex?
I'm not joking.
It tends to drive technology.
You want mass adoption? Tie it to sex somehow.
Tie it to the porn industry or something like that.
I'm just saying.
Yeah, you're probably right. Yeah. They say that's what drives new technology, either weapons or sex. Either tie it to sell of weapons.
And I'd rather it be sex than weapons, personally.
Yeah. Derek, do you have any Bored Ape?
No, looking back, I saw that trend, and to be honest, I didn't get it. I couldn't get on board with it, but I'm actually very excited about what the folks at Yuga Labs, the Bored Ape folks, are doing, and Pudgy Penguins on the IP licensing side. I think they're going to be really leading the technology innovation going forward. But no, I missed it. I almost, in a way, I kind of looked down on it. I just didn't get it. But again, I don't have Pokemon cards. I don't do the collectibles thing in that way. I would collect guitars, but that's a little bit different. I didn't quite get it. No, I missed out on the Bored Apes. What did you guys? Are you guys in that space?
Nope.
No, I didn't get it either.
A crypto skeptic.
Yeah.
I do this show to kind of maybe indoctrinate myself.
We're exploring. We're on a journey, and we're trying to help those who aren't all bought in on anything new, because most people aren't. Kind of understand this space, and really the audience here is actually probably all in already. So what we're trying to do is bring a level of empathy to a bunch of people who probably aren't working hard to empathize, right? Because they're just excited about the technology. And there are 6.5 billion people who will be affected potentially by the decisions made in groups like these. And it matters. And that's what we're
But if somebody wants to gift us some Bitcoin, we'll take it.
Oh, I'll take a Bored Ape. If someone wants to give me a Bored Ape, I'll take a Bored Ape. I want more boredom in my life, please.
Yeah, they're fun. I mean, they've built such an audience that they'll continue to monetize. And I think within those NFTs, here's the beauty of an NFT or a smart contract. In that NFT, you can embed certain rights, and it can give you access to whether it's certain media assets, events, or even potential future revenue streams. And so it's an amazing technology if you kind of step back from just the pure speculative nature of collectibles. It's actually really great.
No, I love the idea. I actually am very intrigued by it, and I recommend everybody, I say it every time, read a book called, what is it, Dan? I always say, Sacred Economics. It really embodies the reason why these technologies are coming out. So, hey, Philip's going to be joining us in a second, so we should probably be wrapping up this great conversation.
How can people find you, Derek?
Well, I guess I'm on, LinkedIn and Twitter. I need to work on my my Twitter
X,
following.
it's X now.
X is right.
Sorry, of course.
It went porn. It just went porn, like Dan was talking about. Everything has to go
Exactly.
porn.
See, Elon knows how to do it.
But yeah, you follow my socials or on Instagram, and maybe I can share those later with you guys.
Well, cool. Well, hey, Derek. I mean, I don't know when. Yeah, this has been fantastic. I could talk more. I'd love to learn more about your
3-hour episode with you.
Seriously, we could. But yeah. Where are you, by the way, right now? Is that what's in the background? What are you seeing?
So yeah, I tend to I'm all over the place, all over the world these days. But right now, I'm in Charlotte, North.
You're okay. You're still in Charlotte. Okay. All right.
Yeah, it's great here. It's nice.
Okay, excellent. Cool.
I've only passed through Charlotte on a drive, so I lived in the South for a while. It's a much different culture, especially if you're coming from someplace like New York City, where you're from, right? Or
very different. I've had to adapt to different New York to California, Southeast Asia, now Charlotte. Yeah, you can't in the South. You can't be too New York in North Carolina.
No, it's a much slower pace, right? Yeah. Like kind of more leisurely.
Yeah, it's different. It's good though. When you do a lot of travel, it's nice to have this kind of a home base.
Yeah. And so it's 7:00.
Yeah, we can wrap this up.